If I woke up today with a $0 net worth, no portfolio, no assets, just a blank slate, knowing what I know after 8 years of investing, here is exactly how I'd rebuild. I've made every rookie mistake in the book. I've panicked, I've overthought it, and I've paid the ignorance tax. If I could go back, things would look very different. In this video, I'm breaking down the 7-step roadmap I'd follow to go from scratch to financial freedom in 2026. By the end of this, you'll have the confidence to stop thinking about investing and actually start doing it without the fear of losing your shirt. Step 1, fix your foundation. Before you buy a single share, you have to get your financial house in order. Roughly 40% of adults can't cover a $400 emergency without borrowing money. That is a trap. If your car breaks down or your boiler explodes and your money is tied up in the market, you'll be forced to sell your investments at the worst possible time. I follow 3 ground rules before I invest a penny. First, kill high-interest debt. Credit cards and personal loans are financial vampires. If you're paying 25% interest on a card but the stock market averages 10%, you're losing money by investing. It's like trying to fill a bucket with a massive hole in the bottom. Patch the hole first. Rule 2, the Peace of Mind Fund. Save 3 to 6 months of living expenses in a high-yield savings account. This isn't for growth, it's for sleep. Finally, Rule 3, income stability. Make sure you know exactly what you can afford to invest every month so you never have to panic sell just to pay rent. Step 2, invest with intent. Most people fail because they don't have a goal, they just have a vibe. They buy a trending stock because they heard about it on TikTok and hope for the best. Don't be that person. Split your goals into 2 buckets. The short term, buying a house, a wedding, or a big trip. Keep that in cash. The market is too bumpy for money you need next Tuesday. But for the long term, 5 years or more, this is where you invest. Between 2020 and 2025, we saw the proof. Global shares grew significantly more than cash. Time heals the market's noise. Step 3, pick your bucket. This is where analysis paralysis usually kills the dream. Don't let it happen to you. People spend weeks researching accounts and 0 days actually investing. Keep it simple. Let's look at the cheat codes. First, the workplace pension. If your employer matches your contribution, take it. It is literally a 100% return on your money instantly. Then, use tax-advantaged accounts like an ISA or Roth IRA. These let you keep 100% of your profits away from the taxman. Step 4, the power of small and boring. You don't need a 100K windfall to start your journey today. If you invest just $100 a month at a 10% average return, in 30 years you'll have over $180,000. That's the magic of compounding. The biggest risk isn't the market dropping, it's you waiting another year to start. Every day you wait is a day of growth you'll never get back. Step 5, diversify. Don't bet on the horse, bet on the race. This is how you protect your downside. If you put all your money into one tech stock or one crypto coin, you aren't investing. You're gambling. I prefer index funds. An index fund lets you own a tiny piece of hundreds of companies all at once. If one company fails, the others are there to carry the load. Step 6, set it and forget it. Fidelity found their best performing investors were, well, dead people. Why? They didn't touch their portfolios. The secret to winning is automation. Set up a recurring transfer for the day after payday and let the system do the work. When you automate, you remove the human element, which is usually the part that messes everything up through fear or greed. Step 7, master your emotions. The market has crashed 19 times in the last 150 years. It has recovered 19 times. When the sea of red happens, and it will, don't look at your daily balance. Look at the 100-year chart. Those drops are tiny speed bumps. The market rewards the patient and punishes the frantic. Zoom out. Your future self will thank you for staying the course. Investing isn't about being the smartest person in the room. It's about being the most disciplined. It's about consistency over intensity. If you want to see exactly how I pick my specific asset mix for 2026, I have a video coming up on that very soon. Subscribe so you don't miss it. Thanks for watching, and remember, the best time to start was 20 years ago. The second best time is today. I'll see you in the next one.